So I woke up tonight, couldn't sleep. Then I was like, why not make content for you guys? So I walk out of my bedroom into my office. My office is just next to my bedroom. Forex trader lifestyle, work anytime. So I walk into my office and I had this thought of sharing with you guys how I trade the news. So let's jump into the video. Hello YouTube, welcome to the Denard Forex Academy. My name is Director Denard, and tonight I want to be sharing with you guys two important strategies of making money in the Forex market. As you can see in that video on the screen, I just flipped $8,000. Now I want to be sharing with you guys exactly what I mean by flipping an account and the strategy that I used to flip this account. Now we're going to be talking about something very interesting in the Forex game or in the Forex industry, and that is fundamental trading. Now most of you are already well versed with technical analysis, but there's something else that we trade in the market besides technical indicators or besides technical tools like the candlesticks and moving averages. That is called news trading. Yes, in Forex we trade the news, and I'm going to be sharing with you guys 3 simple news trading strategies that I've been using and that help me flip accounts. Not to brag here, but when it comes to news trading, you can literally wake me up in the middle of the night, give me a news event, and I'll flip for you that account. Like literally, everyone has that thing where they're very confident. It comes easy for them. So when it comes to trading, specifically news events, I'm the OG. When it comes to news trading, I'm that special doctor. Big story. In 2019, I remember I just started news trading, and the excitement was in the air. That's when I actually bought this laptop you see here. This laptop here is a Dell Inspiron gaming laptop. It's an i7 with 32 gigs RAM and an NVIDIA graphics card. I bought this laptop for about it was about $1,500 back then. I remember it was 4:30 a.m. Yes, and there was this news event from New Zealand. I think it was the interest rate, CPI or interest. I think it was the New Zealand interest rate, the Bank of New Zealand. I had this account. I had grown the account from $400, and it was at $700. And I remember trading the New Zealand USD pair, and I made $1,400 on that trade in like 30 seconds, in split second actually, because when the news comes out, that spike on the 1 minute time frame, the news spiked. I didn't even see that trade. I just saw my balance increase because I had set the take profit and the stop loss. So when the news came out, it hit my take profit, $1,400 in a split second. And that account, I remember it reached 2K. I withdrew that 2K and I bought this laptop. So anyway, back to the video. News trading is a very, very lucrative strategy in Forex trading. And I know some people might disagree, but I think that's because they didn't get the proper training to trade the news, or they didn't get the proper psychology. I'm going to be sharing with you guys 3 ways that you can trade the news and how you can flip an account using these strategies. So first things first, let's talk about flipping an account. Flipping an account means, what is flipping an account? Flipping an account means turning your account into a 2x or a 3x. It's not for small boys. Now let's talk about flipping an account. This is where you turn an account into a 2x or a 3x, literally doubling or tripling the money in that account. Now this is something that some of us do, others don't, because it's very risky. That's why I say flipping an account is not for small boys. Hey. I've seen videos on YouTube of people blowing accounts.
1 minute to go. 1 minute to go. It's a sell. On a real account, I'm on a real account. NZDUSD is a sell. NZDUSD is a sell. It's a sell. It's a sell. It's a sell. It's a sell. I gave the signal. I gave the signal. I gave the signal. Classic Forex trade. Kablowy. Kablowy.
They were attempting to flip, and when things go south, you know what happens. But the psychology behind flipping an account is that you have already given up this account. You have already sacrificed it to the market. You are already comfortable with the outcome. Whether you make money or not, you have already accepted that fact. And that is something that you should know before attempting to flip an account, because anything can happen. Even with the strategies I'm going to share, however much they have the high win rate, we know that anything can happen. So for example, you have a $100 account and you don't want to be risking 2%, 1%. I mean, when is that going to make you, when is that going to buy you a Lambo? You can try flipping that account to, let's say, $500 or even $1,000. I've seen traders turn $50 to $3,000 to $5,000. It happens. So let's dive into the fundamental strategies that I use to flip an account. Look at that sniper entry on gold. Currently trading news. Now when you see that account, I was trading it last week. I was adding 1K using gold to that account. So I took that account from $7,000 to $8,000, and now that same account is doubled. How did I do that? Let's jump into it right away. Like I said, I'm going to be sharing with you 3 simple news trading strategies. And the first strategy is market direction. Yes, market direction is when you anticipate the direction of the news event before it actually happens. So here we use various methods. We can use technical analysis to anticipate the direction of the news event, but we can also use market data. We usually do this like 1 minute or even a few seconds to the news event. We first of all anticipate or analyze and find out the direction of that particular news event. Now I'm going to be giving you a few examples, but there are so many news events out there. For example, the analysis that I use on NFP, or to determine the market direction of NFP, is different from the analysis that I use to determine the market direction of FOMC or the Fed interest rate. Alright, now just to show you a quick example on how I trade market direction. This was the USS CPI. This was a news event that came out on the 12th this month, this week actually. Today is Friday. This is a news event that came out this week, and you can see that the moment the news dropped, gold went massively bullish. You can see there's a massive bullish movement on gold based on this news event. Now, you might be wondering, how do we see these news events and how do we take market direction before the news drops? Now, there's a calendar on a site called Forex Factory, and it's specifically a news events calendar. There's only news events here, so the calendar shows you the events that are coming out every week. All these are news events. This is the event we're looking at on the TradingView chart, the CPI USD. So this is the USD gold. You can see how the news impacted the price of the pair, and we always watch out for these events. Come over to forexfactory.com/calendar and you'll be updated on all the latest news events in the forex market. Just a real quick tip: when you come here, you can actually change the type of news you want to see, because usually it's showing you all the events. Now what I like to do is, some events are marked red, others yellow, and some are marked orange. So the red ones are the ones we are looking at. These are the high impact / high volatility news events that I like to trade. So you can come over here and go to filter and uncheck the boxes for the orange one, the yellow one, and the gray one. The gray ones are ones that don't have any impact, so you only leave the red ones. Now these are the events that actually move the market. So we're looking at CPI USD 3:30 p.m. This is the event, and you can see it was very bullish. You might be wondering, how do you determine the direction of, or how did you know that it was going to be bullish before it came out? Now there's another site called FX Street. Now on this site there's a lot of information coming from the streets of forex, as the name goes, FX Street. And I like to come here and go over to analysis, say gold. And what happens that there is usually a fundamental overview and a lot of information on this website from different banks. We're talking about big banks that actually move the market. They usually give a lot of analysis and insight on what a particular news event is going to do to that particular pair. For example, for CPI, there was a lot of information here on this particular site that was already pointing to a bullish direction on gold. Again, I won't go into the details given that this video is supposed to be short, and also if you want to learn more, you can always join the academy where I give the exact thing you should be looking out for in order to determine the market direction. So you can see this news event was very bullish. It went on to buy all the way up, and if you had got this move based on the information you got and based on all the other little analysis that you can top it up with here before the news came out, you'll be able to flip your account, guys, with this move here. Look at this. This was massive. This was a massive move. Tell me that you can't flip an account if you knew for a fact that the market is going to spike in this direction and it's going to spike hard. What would you do?
The second method or strategy that I use to trade the news is called straddling. Yes. Now, what is straddling? Straddling is when you set buy and sell orders in anticipation that the news will trigger at least one of those orders. Now, this is a very, very high win rate strategy, especially if you do it right. It means that a few minutes, actually a few seconds to the news event, you set up a buy stop and a sell stop. So that way we know that the volatility that's going to come from the news will trigger at least one of those orders. You need to be very technical, you need to be very savvy to set this up. I've seen people lose money trying to straddle, but I'm going to let you in on a little secret. Now, I use what we call a robot or an expert advisor to do this. It's very hard to do it manually because when the news event comes out, everything happens in an instant. It's not easy to set this up manually. You need to use a robot. This is what I've discovered and this is what I use. Even with that NZD news that bought this laptop, I was using a robot. Now, what the robot does, let me first explain to you the technicalities of what actually happens before I tell you this robot and another thing. You also need a VPS, by the way, but we'll get into that. I actually set the robot to open the orders 5 seconds to the news. 5 seconds. Now, if I do this manually, it will be very hard to set a buy stop and a sell stop 5 seconds to the news, more or less, and things could be different. There are so many things that happen when the news is about to come out. For example, some brokers might manipulate the spread, they might manipulate the platform. That's why I'm also going to recommend a broker that doesn't do that. It took me months to look for a genuine broker that does not manipulate the news. So 5 seconds to the news, and this robot opens the 2 orders, a buy stop and a sell stop. Also, what I've configured on these orders is a take profit and a stop loss. So this robot will not only open these orders, but these orders already have specific take profits and stop loss orders with them. So that when the news comes out and the order gets triggered, immediately in that 1 minute, this trade can hit its take profit. Another thing that I set with the robot is break-even levels. So this robot will not only open that trade, but the moment the trade moves in your direction a particular number of pips, immediately the robot will open a take profit. Immediately the robot will also open a stop loss, or what we call a break-even in this case, because now it's open on the other side or on the profit side. So even if the news retraces, you don't lose any money. In other words, it becomes a risk-free trade. And all this happens in a matter of seconds. Now, I talked about a VPS. Yes, you need a VPS to execute this type of trades, because during high volatility times, usually the market is very fast and you need a very fast connection to the broker in order to, we're talking split second execution speeds. If you're trading on a normal laptop or your phone, you might not get these speeds. You will encounter what is called slippage. Now, what is slippage? Slippage is when your order does not get filled at that price that you wanted it to be filled at. So for example, you open a buy trade and the market moves so fast, before you know it, instead of getting this price, you get this price. So that can be very detrimental in news trading, because it means that you could end up catching a retracement. You could end up trading a retracement, like buy when the news is already selling back, the buy move is done. So you need a VPS. And what I've done is I've found this particular VPS that works very best with this particular broker, which I'm going to share with you, the broker that doesn't manipulate news. It took me months to come across this broker. So most of the brokers out there, during news events, they freeze the platform, they reduce the leverage so you can't open trades. They do all sorts of manipulation. Some of them go as far as stop hunting their traders during the news event, because they know that it's a high volatility moment, so they can always come up with the excuse, oh, you saw the move, it was highly volatile, but when in actual sense, they manipulated your trade and took out your order. What I've done is I've come up with this package of a genuine broker, a VPS, and a robot. And when I put these things all together, they come up with a perfect news trading strategy. On top of the broker that I use what is called an ECN account. Yes, now when you're trading the news, and I know some of you hate the news because you've lost money trading news, right? You who's watching this video, I know. I've also lost money trading the news, but that was before I discovered a combination of all these different platforms and strategies. So let's go back to the ECN account. An ECN, or an electronic communications network account, is different from any regular account. Now, some of these accounts that you have with your broker, they are not actually accounts that link you to the forex market. This is the sad fact. You're not actually trading the actual market. You're trading a simulation. The broker doesn't have your best interest. It's like what we call a conflict of interest. You want to make money, the broker wants to make money from you. We call those market makers, and those brokers are very common. 90% chances are, if you're watching this video, you're trading with a market maker. That's why I recommend that you check the description. Brokers in my description, I have verified them, I've been with them for years, and I can tell you they are honest. An EXNESS account links you direct to the forex market or to the interbank. So some brokers have this platform where they give you direct access to the market liquidity, and those are brokers that offer what we call EXNESS accounts, on top of being very fast accounts because you have direct access to the market. They also give you very little spread. In other words, these are accounts that have literally 1 pip or under a pip in spread. EXNESS brokers or EXNESS accounts only earn on commission. So it means that every trade you open, they earn commission. They are not interested in spread. They are not interested in how much money you make because they have linked you to the market. They don't care how much money you take out. So that way, you have common interests. They are interested in your trading volume and your commission. So that way, they are not going to manipulate you or do any shady stuff because that will take you away, which defeats the purpose. Now, I've linked a broker that is recommended for news trading in the description. The broker is called IC Markets. Probably you haven't heard of them because, like I said, in this game, the fake brokers shout a lot, they advertise a lot, but the genuine guys are out there doing work for professional clients. Now, what I've done is I've paired IC Markets with a VPS. A VPS is a virtual private server. Now, what a VPS is, it's a virtual computer that is located next to the broker. So in normal trading, to give you an example, if you're trading from Africa, Uganda, where I am, there is what we call latency, or there's that gap between the internet in my country to reach the servers in Europe. So every time I open a trade, there's that time between me pressing the buy button on my computer and that order being filled from a broker in Europe. Now, what a VPS does is, instead of having to trade on my computer, I open up this virtual private server that is located in Europe, and basically the distance between this server and the broker's server is so short that the time it takes for the order to be open is literally a microsecond. And that's what you want in news trading. You want to bridge that gap between when you open the order and when it actually gets filled. IC Markets has its data centers or its servers based in New York. I'll put a link in the description for the VPS if you want one. They are very cheap. They usually range from like $10 a month, or there are some as cheap as $5 a month. And I find that to be very cheap investment based on what you get in return. Trust me, the difference between a fast and a slow connection when it comes to forex trading can mean a $10,000 loss. I mean, we could be two traders. I'm fast, you're slow. I made 10,000, you lost 10,000. We did the same thing, but your internet or your connection was slow, and that cost you. So I cannot stretch enough the importance of having a VPS when you're trading the news. Back to strategy. Now, assuming you have everything in place, you have the broker, you have the VPS, and you have this robot, which I'm not going to be sharing this robot for free, unfortunately, because I bought it with cash, and a lot of cash. If you want this robot and how to set it up, you can contact me at the Forex Academy. I can help you out for cash. I'm selling this robot, guys. Let's be honest. I bought it cash. I can't just serve it out for free. It's a straddler. Or if you can just Google Forex straddling and do your own research, and that can be a route, a free route. You can find ways of, or you can find robots that can do this, but I highly doubt you're going to come across a robot as good as this. Trust me. I'm just giving you legit stuff and how it works, and I'm just being honest with you. For a small fee, I can give out this robot. Now what's going to happen is you just need to set this robot to tell it that the news is coming out at 3:30. Let's say it's NFP, it's coming out at 3:30 p.m. You just set in the inputs, it's coming out at 3:30. I want the order to be open 5 seconds to the news, and that's it. You just sit back and wait. The moment the news is about to come out, robot press the orders and bam, everything is automated. You don't have to do anything, you just have to watch like I did. I literally watched my account spike from $700 to $2,000, and that was way back in 2019 when I just started trading. So let's talk about straddling. The dictionary definition of straddling is when you sit or stand with one leg on either side. You know how you put one leg this side and another leg this side, and there's usually something in the middle? So that's what we are doing to price. We are straddling price. Let me show you here how it's done. So with straddling, you have a buy stop and a sell stop on either side of the price. This you do before the news comes out, usually like a few seconds to the news or a few minutes to the news event. And what usually happens is when the news comes out and spikes in whatever direction. For example, here, this is the CPI at exactly 3:30. That's when it came out. Before that, you place two orders, a buy stop order and a sell stop order. And what a buy stop order means is when price reaches that order, it fulfills a buy. In other words, it opens a buy. And a sell stop order means the same, only that this time it will be selling. So when the news comes out and price spikes, it taps your buy stop order and immediately you buy. In other words, you go into a buy trade at this point. So when the price continues your side or your direction, you can choose to either get out depending on your take profit level or to even hold. You can see this was a very bullish trade. It was very juicy for holding. You could like open maybe multiple. You can actually set a number of orders. You can have 2 buy orders and 2 sell stop orders, and that way you can choose to perhaps hold one or get out, because there are news events that retrace. Not every event will continue with the data, but yeah, this is usually how we do the straddling. Now if you've been around and you've seen how the news usually acts, it's so fast. This move was so fast. We're talking microsecond fast. So you would need an EA or a robot to help you with execution of such trades. Also a VPS to make sure that you actually catch these trades, or you actually have your order executed at that price. Because without a VPS, this is what would happen. The news comes out. Yes, you have your buy stop and your sell stop, but when the news comes out, instead of getting filled here, you could have that buy filled somewhere here. So this difference here between where your buy stop order was and where it was actually filled is what we call slippage. And guys, it's not very rare to see this kind of slippage happening, especially with some brokers, because some brokers during the news event, their servers they claim that their servers are so busy and they couldn't fill your order in time. So you end up either catching very little profit or sometimes even catching a loss, because here this retracement here could cost you money. So a VPS makes sure that you get filled at that exact, or you experience very minimal slippage. The VPS I use, it's co-located with a broker. It's called VPS co-location, which means that the VPS is on the same building as the broker's server, and what that means that you get near instant or near zero latency, guys. So that's very important to know when you're working in this type of very fast environment.
Now, let's talk about the third strategy of news trading. This is what we call trading the fade or trading the after event. You wait for the news to come out, you wait for that knee-jerk reaction or that instant reaction, you wait for it to calm down, and then you place the trade based on the figures. Now, usually with the news, there's always that forecasted figure. For example, it's the NFP or the non-farm payroll. There's that figure that analysts, basing on the economy for that past month or basing on performance of the economy for that past month, the market or the economy could have grown by these basis points or by this number of figures. And when the news comes out or when the actual figure comes out and it's different, maybe good or bad, from what the forecast was, that leads to a market reaction. For example, I'll give an example on NFP or the non-farm payroll. If you don't know what NFP is, you can just Google NFP and try to find out. It's a popular news event in the USA which gives the growth of the US economy in terms of jobs or the number of jobs that have been added in the US economy every month. And when that news comes out, it affects that US dollar very, very highly. It has high impact on the US dollar. So when the NFP comes out and it was positive for the dollar, let's give an example. The anticipation or the forecast was 300,000 jobs or 300k, and then the actual figure comes out to be 550,000. So that means that the dollar is going to gain strength in that moment. And once you see those figures, you can easily make an investment decision. You can decide to buy the dollar. In that case, you can buy the USD JPY. But how do you do it? You wait for the news to come out. Usually it comes out with a strong impulsive move. You wait for the impulse to fade. You know now the market is going to buy, the dollar is going to buy, but you wait for the impact or the volatility to fade a bit. Then you find a right retracement and make your buy order. So that way you're not worried about being taken out by spikes or even by fake brokers, because usually after the news comes out, maybe like 15 minutes after the news, the fake brokers will turn off their manipulation algorithms and all that crap. So you are safe. Trading the news after the event is a safe way, because it means that you're not open to intense market volatility. You're not susceptible to manipulation or any of that creepy stuff that some of these brokers are known for, apart from the brokers I'm sharing in my description.
Alright, so last but not least, let's talk about the trading the fade strategy. So here you wait for the news to spike or the initial knee-jerk reaction. You wait for it and then you go in after the fact. So there was a retracement here. If I pull out a fib, this is called a Fibonacci retracement tool, you can see that after the initial spike, the market retraced about 50%, maximum I think it was around 61% max, and continued that initial direction. So also you can check out the data. So this was the US CPI. The CPI is usually the data that determines how much goods and services were purchased by consumers. So usually a lower number is bad, or it's not good for that particular currency, in this case the dollar. So analysts had anticipated 0.3%, but it came out at 0.2%. You can see it's marked red, which means it's actually bad for that particular data or that particular currency. In this case the USD. What happened then? You know that the dollar is going to sell and gold is going to buy. Remember, gold is in correlation with the dollar, so every time that the dollar is strong, or every time the dollar is buying, gold is usually selling, because gold is sold alongside the dollar or bought alongside the dollar. So in this case, we knew that based on the data. Remember, the data came out at exactly 3:30. So 5 to 10 minutes later, actually this was like this happened around 15 minutes later. We would wait for the price to retrace. Remember, we know based on data that this price is going to keep buying. Gold is going to keep buying. It's bad news for the dollar, so gold is going to keep buying. We would wait for the price to retrace and then start entering our long positions from here, right here. And you can see that we end up making a lot of profit on this trade, because either way, we didn't catch the market initially. We didn't catch the market from here like we do in market direction, but we're also able to take advantage of the subsequent or the preceding price movements and be able to make profit. You can see that a long position over here at the 50 or the 60 retracement on the Fibonacci indicator was enough to give us a good amount of pips. So yeah, that's the third way I like to trade the news. And yeah, now if you want to learn more, you can join the Denard Forex Academy and get educated on the details and exactly how to master the concepts or the strategies of news trading, so that you turn from a blower to a milker. It's a brand new channel, but I promise you I'm going to be dropping high quality content. Don't forget to like, subscribe, join the academy, and let's keep winning. Happy trading. Peace.